Hi, I'm Mehdi Sundaji, and welcome to Your Finance TV's Crypto Revolution, where we cover all things crypto and digital assets. There's always a lot to talk about in the world of crypto. But before we do get into it, don't forget to like and subscribe to our channel. We're around the 3,000 person mark. So, thank you for all your support, and it keeps growing every day, day in, day out. And of course, feel free to drop us a line if you want us to discuss anything in particular. Adam, welcome back, mate. Good to have you.
Good to be back, Matty. Like you said, always something going on in crypto.
There really is. It's never a dull topic. But you've been well.
I've been well. Things have been good in crypto. It's a great summer here in the mountains in Colorado. So happy to talk about it, man. There's a lot going on, and as we'll talk about, there's a lot of this kind of merging of traditional finance and crypto now. They're kind of coming together, and for some people that's a big negative. For some, it's big positive. Overall, I see it probably pretty good for crypto. So let's get on it, man.
Yeah, absolutely. We've got to kick off with the topic du jour, right? Last couple of weeks, everything's been on the BlackRock and others ETF applications for a Bitcoin ETF. Larry Fink's been on the media circuit talking about democratizing access to Bitcoin, which he's now seeing as digital gold. Certainly changed his tune a little bit, but we'll take it. Not sure if there's much of an update, but all eyes are still on this application. You've been watching the news with him.
Sure, and Mehdi, as of last week, it went past just that application, right? Because obviously BlackRock filed their application, and you and I talked about that quite extensively, and about what that means. And we've talked about how they must know something, they have the inroads. But more importantly, last week, Larry Fink was on Fox Business, and he was talking about, of course, all things economy and finance. And of course, they asked him about his stance on Bitcoin and the Bitcoin ETF application, and his stance on crypto and blockchain overall. And to me, that was more telling, right? Obviously, the application is a big deal, but he said some things in there. He mentioned he sees Bitcoin itself as being digital gold, which is something we've heard from hedge fund giants for a while, which is obviously something that the Bitcoin proponents have talked about. And now for Larry Fink, the CEO founder of the largest asset manager in the world, to say that is kind of a big deal, talking about Bitcoin as digital gold. But then he went even further, and he talked about, he was asked about blockchain technology, and he was actually kind of questioned where the host of the show said, we haven't seen much from blockchain technology. We haven't seen something from all that promise. And Larry Fink, kind of pushed back and said, no, this is going to democratize access. At some point, we're not going to need the custodians that we need right now. This is the tokenization of assets, which is something you and I have talked about, and something I've been big on for a long time. Tokenization of real world assets or traditional finance assets is a big deal, because it's going to make the processes more efficient. It's going to make it more transparent. If we want to go to some other news that I know you and I didn't queue up, but yesterday, I think it was yesterday, Bank of America got fined from like $250 million for opening fake credit card accounts or credit card accounts for clients. When you have a level of transparency that blockchain technology gives you, that tokenizing assets or tokenizing investments gives you, you don't necessarily have those kinds of issues with fake accounts or banks like that having that kind of black box and being able to do that. And so I think Larry Fink and BlackRock are all in on not only Bitcoin, right? That's just the beginning for them, but this tokenization, this democratization of investment and assets. And that to me is what is even more exciting than a Bitcoin ETF.
And it's funny you say that, because I feel like a lot of financial institutions have lived in that opaqueness and those shadows for many, many years and profited quite nicely on the back of it. So not sure how much support they really have for the democratization of all of this.
No, and you're right. They've taken advantage. And when I teach my courses to people, I talk about why Bitcoin exists and why crypto exists. And one of the big reasons why it exists is because we had to outsource so much trust to banks, right? If I'm going to send you money, there has to be a way for me to hold that money and send it to you. And that was always through banks. And starting in 2008, we realized they violated a lot of that trust. Right, they took a lot of our assets. They played around with them. They took a lot of risks, and now what we're seeing is the fact that they're the ones who get to hold the keys to our money means that they get to do things like open up accounts for us, because that's how the people get paid. If they open up more accounts, they charge more fees. And if I don't call and complain about it, it just keeps happening. Right. So they've played in that opaqueness, and that's where we've lost trust. Right. And I think with all the stories we've seen, there's no going back on that. And when you have another technology that can take that up, where you don't have to have that trust in an institution, you just have to have trust in some code. I think not only losing that trust like we did in 2008, and we went right back to banks because we had to, but now we have the technology to say we don't need them as much anymore. I'm not going to say we don't need them at all. We don't need them as much.
And the golden rule has always been trust but verify, but we were never in a position to be able to verify. And now, this technology, we are being empowered to verify. So bring it on. So, rolling on to another topic that's been quite hot in the press is the Grayscale letter to the U.S. Court of Appeals for the District of Columbia. They're alleging the SEC approved, well, we know the SEC approved a leveraged ETF last month. And they're saying basically this is riskier than a traditional Bitcoin-based futures ETF. All of these things, are bringing more focus. The SEC and regulators are protecting underlying investors, and they should be looking at de-risking a lot of these situations. And that's what they're looking at, allegedly, right? But, Grayscale is raising the fact that you're approving a leveraged futures ETF on Bitcoin, but there's no spot ETF being approved, ultimately, is what their argument's drilling down to, right? They're getting there in a circular way, but that's ultimately what they're arguing. It seems like a death by 1,000 cuts for the SEC with all these things. So what do you think there's any?
And of course, right. It's an argument that people made a couple weeks ago or last week or whatever, when that 2x ETF, which is, it's kind of ridiculous that Bitcoin futures ETFs are approved. It's even more ridiculous that a 2x Bitcoin futures ETF is approved. Ironically, if the spot ETF gets approved, that 2x futures one is going to just absolutely blow all performance out of the water, right? But what Grayscale is saying is right. And of course, Grayscale has an axe to grind here, because they've been applying for ETFs for 5-6 years trying to get them approved, and they haven't. And now, what they're going to the SEC is saying, look, you're falling on this idea of investor protection. That's what you're supposed to do, and that's why you're saying you want to approve a spot ETF, but you approve something that is much, much riskier. But we know from an approval process, and I think we've talked about this, Mehdi, that the approval process for an ETF that features some other derivative like futures, it's not necessarily an approval process, it's a not disapproval process, right? If you apply for something that is based on futures or some other commodity or something else that's already regulated, all that has to happen is the SEC doesn't disapprove it, right? Whereas for a spot ETF, they have to actually go through the process of approving it. And that's why the futures ETFs get through and get approved, whereas a spot will not, right? But what the Grayscale is saying is, you can't make the argument that you're all for investor protection and let a 2x spot or a 2x futures ETF in. But among that language, among this lawsuit that Grayscale filed against the SEC probably has the ability to go, you're right, we're going to get rid of the 2x leverage one. We're not going to give you a spot one, but we're going to get rid of the other one that we see as more risky.
That's crazy, right? I guess it's a solution from their perspective, but it doesn't really help the overall picture of things. It just creates more opaqueness in the universe of regulation.
Right.
Now, within this whole opaqueness in regulation, someone seems to be trying to step up and fill that void, and it's my old alma mater, the UK. They seem to be stepping up and saying, bring on the crypto refugees, come to the UK. The water's warm. Well, not that warm, but let's see what we can get done. And we saw, even people like Andreessen Horowitz, what was it, a couple of months ago, last month, whatever, they opened up a new office there. They're putting their feet down to try and establish that headquarters.
Right. Well, the market is already talking with their movements like that, right? As you said, Andreessen Horowitz, A16Z is opening a headquarters over there, opening an office there. And of course, London being another world financial center. and the UK already having regulation, already starting to regulate this, already being right there next to, not a part of the European Union, but right there next to them. And the EU already has regulation. So obviously the UK is going, look, as long as regulation in the US is going to be, as we say, opaque, not quite certain, come on over here, crypto companies, blockchain companies, we're happy to have you. We are more established, and probably what they're saying is, look, we're more established than Dubai, we're more established than Singapore and Hong Kong. You're not dealing with those countries and maybe certain people you don't want to be dealing with. That we're old, kind of stodgy London, UK, but we've been a financial hub for centuries. So maybe this is where you want to set up so that you can be over here in Europe. You can have ties into our financial system, and we have already started down this regulatory path. So of course they're open and welcoming more U.S. companies. It's more jobs, it's more money, and it's more entrepreneurial activity. I mean, we've seen like Europe has not necessarily been this bastion, and the UK is this bastion of entrepreneurial activity for a while, but now they're getting the opportunity to put in these regulations to bring on the new version of tech, right? It's almost like they missed out on a lot of the internet stuff, which went very much to India and Asia, and obviously to Silicon Valley here. And they're going, we're not missing out on this one.
That's a really good point. I'm still stuck on the fact that he called called everyone stodgy, but that's a really good point on missing out on the internet like situation over the last 20 years. They really haven't participated as much as they probably could have. And Rishi Sunak, the Prime Minister, is he's very crypto forward. So he's trying to embrace this in any way possible.
And I agree with it. It's a great opportunity. It's not, I mean, it's not unlike what a business would do. They're just trying to get more people there, which is obviously more tax revenue, more jobs, all the things they need.
Which is great. And and another company, you mentioned them as well, Hong Kong. Hong Kong seems to be stepping up as well. I believe there was a white paper that was submitted to their Treasury Department, and they're looking at it very seriously about bringing their own stable coin to compete with Tether and USDC. They certainly have the Treasury reserves to back it, which was what was proposed within this white paper. I believe also Singapore has done something similar on a smaller scale than Hong Kong. But if Hong Kong did this would be quite meaningful for that region.
It would probably be quite meaningful. Of course, everyone I think wants to go, all right, we are seeing kind of a decline in the value of the dollar. We're seeing the U.S., everyone's kind of poking some holes in the U.S. and the U.S. financial system. And with this new technology, maybe this is the Hong Kong, the ability to go, look, we want the Hong Kong dollar to be front and center now. And if we can get it on chain and more people using it within these blockchains, within the crypto universe, maybe this is our opportunity to get the Hong Kong dollar there as one of those new, kind of world currencies. So, I totally get that. Like I've been a bit against central bank digital currencies. I wish there's another way to do it where it's not issued by the government. But I completely see what Hong Kong is doing. And you and I, again, have talked about this in the last few months. Hong Kong has come out of nowhere and just said, we're going to have regulations, we're going to have white papers, we're going to try to attract more kind of crypto business, but we're going to make it easier for people, for companies, for protocols, for projects to set up here based on our regulation. And again, based on our being a financial hub. Hong Kong has been a financial hub in Asia for a really long time, much like London has been and the UK has been in the rest of the world. Hong Kong has been that in the Asian world. And therefore, it completely makes sense for them to jump on this and to jump on it with not only crypto regulation, but say we're going to try to issue our own CBDC so that our currency is actually utilized on chain. Probably a good move for them.
Absolutely. And it's funny, the more we talk about these things, the more frustrating I find how opposing the US regulatory system is to all of these things. And there's even when you see the conversations that come out of not necessarily the regulators, but whether it's Congress or congressional members or whatever it is, politicians, it comes down to still that comment of, oh, well, crypto is just used by nefarious players. And it's the same circular argument. And it's extremely frustrating to listen to when you see the not even necessarily adoption, right? But the open-mindedness of the rest of the world to try and embrace this and bring it into the ecosystem. And yes, some governments are trying to control it, some aren't. Some are a bit more open to flexibility of genuinely embracing the DeFi nature of it. Some aren't, right? But there's conversations going on, and there's actually a look into how these things can be adopted.
Yeah, and you're right, Mehdi. And it's interesting because if we go back to our conversation from Larry Fink, right, it is these other people in these other countries realizing the utility of the overall system. Whereas it seems like many in the US are still stuck on the speculative nature of cryptocurrencies and the trading nature and the scams and all that, and not going, but wait a minute, the underlying technology that's there can be really important. It can open up access. And the US people are going, well, we just don't want our people trading crypto and losing money. And others in the world are going, we can utilize this system. It can be much better, more efficient, more transparent, give more people access, all of those things that we want. All of those things that, by the way, the internet was supposed to bring and hasn't yet, because we still, everything on the internet, anytime we trade anything, it's still on the old banking rails. So now, by the way, the old banking rails that fund all the politicians. So if you want me to put on my tinfoil hat, the old banks fund all the politicians, and therefore they don't want a competing system. Everyone else in the world goes, this is our in. We're going to utilize this system. And by the way, it uses new rails in order to move money or move currency or move assets back and forth.
And I guess that rolls into our next topic, where the regulators are kind of falling over their feet. But what about the tax man? Is the IRS actually figuring things out? Are they starting to get on top of their game here?
I think they are, and I think part of it is they're understanding the technology a little bit better. I think part of it is a lot of the companies and protocols in crypto are not looking to evade taxes. They're not looking to give people a way or a reason to get around paying taxes. They want to be compliant. We've seen it from the biggest exchanges like Coinbase and Kraken and Gemini. They want to be compliant. And the IRS is kind of figuring out how they can go about making sure that people are compliant, making sure that people are paying their taxes. And we've said before, blockchain technology is incredibly transparent. If you're trying to hide assets from the IRS, if you're trying to hide assets from the US government, if you're trying to steal money, if you're trying to hide assets from some spouse you're divorcing, blockchain and crypto technology is not the place to do it. So yeah, the IRS is getting a little wise. It's probably not all that hard. They've actually been working with some crypto related companies to go, look, we can see everyone's assets pretty well if they're on chain. And for the IRS, I think blockchain and crypto is actually going to really help them out a lot. Everything is so transparent. They don't have to wait for me to file anything. They can see what I have right away. Eventually, I think when more of our assets are denoted on chain and more of our financial transactions happen on chain, there's going to be a time when I just kind of push a button and my tax return is filed because all my information is already there.
What a wonderful world that'll be. There'll be a couple of companies to short along the way for that, all these tax writing companies, tax filing companies. So I look forward to those days. Tax time is always a pain in the behind. So yeah, bring it on.
Yep.
One of the things that's been in this rising rate environment, something that's been a topic more recently is T-bills. They are certainly boring, but they're yielding a nice little safe 5% these days. So they've become a safe haven, but there's now chatter of moving them on chain. How's this all going to work? It's all very exciting, bringing this the old school to the new school.
Yeah, and look, I think there are a lot of people kind of in the crypto and DeFi world that got off track and said, look, this is going to totally replace the old system, totally replace dollars, totally replace the old banking system. But I don't think that's the case. I think this is an evolution. This is an augmentation of the current system. And so in that case, when you have treasuries, T-bills, which are still probably the safest financial instruments in the world, right? That where you're getting interest literally from the US government. You're lending money to the US government and earning interest that they are not going to default on probably in our lifetimes. This is a really safe place to earn money. Now you couple that with the fact that there are several organizations in the world or people in the world that maybe don't have access to easily buy T-bills, or maybe don't have easy access to treasuries, Dow treasuries and such that are, I mean, some of those Dow treasuries maybe have billions and billions of dollars in them, and they would love to earn 5% risk free. And so that's where we have a few groups. The one I think you're alluding to is Robert Leschner, who's the founder, interestingly, the founder of Compound Finance. Compound Finance was kind of started DeFi Summer several years ago when their Compound token was launched on Coinbase. But Compound is one of the original kind of DeFi companies, and Robert Leschner founded it. But now he's founded a company called Superstate that is offering currently treasuries kind of on chain. So he's basically created a fund, like a mutual fund that's holding treasuries, but it can also be tokenized, right? So we talked earlier, with Larry Fink about the tokenization of assets, and this is going that direction. So Leschner started it. He said, look, there is a demand for this. This is low hanging fruit. There will be other traditional assets that we tokenize, but this is the easiest right now because in DeFi, you can't earn 4 or 5% anywhere. In treasuries, you can. There are DAOs that want to own this. There are just individuals that want to own, that want to get 4 or 5% return on their dollars. So why not do it? Maple Finance is another protocol that launched this several months ago and got over $100 million in their pool almost immediately. And this is from DAOs and other people who are crypto or DeFi native that want that 4 or 5% return from treasuries, and they've done that. It seems, again, boring and old and stodgy, but the point of crypto and DeFi is not to totally replace the system or kick the old system out. It's to go, how can we make it more efficient and transparent? So what Maple has done and what Superstate is doing is making it a bit more transparent and a bit more able to utilize it, whether you have an account that's in dollars or whether you have an account that's in USDC or crypto. You can have access to those same treasuries and that same risk-free 4 to 5% return rate.
Looking forward to it. Again, comes down to transparency and ease of use, and the tax man will be happy because it'll all be on chain and they'll be able to charge your taxes quite comfortably. So it's we're all heading in the right direction. Death and taxes.
Exactly.
NFTs. These guys have we haven't talked too much about NFTs over the last few weeks. They seem to have fallen a little bit out of favor. What are your thoughts? Do you think this could be a longer NFT winter for these guys, or do you think we're going to start seeing a bit of interest again?
I think what's happened is that the market has spoken, right? And the market has said, look, there hasn't been that much liquidity for NFTs overall, which is partially what has driven the value of them higher. They're not very easy to sell, and therefore the value hasn't come down. And then a protocol called Blur or a project called Blur came out and made a tremendous amount more liquidity for NFTs. And what we saw was when there's more liquidity, the prices fell. So that is just the market speaking and saying, look, maybe with a lot of these, there's not as much value as people thought. And I don't know how long it's going to last, but I think what we're going to see is some of them that actually have really, use cases we've talked about, the ones like the Bored Apes eventually that might have some sort of revenue feature to them, might have some sort of participation in the revenue, participation in the royalties or something. Those will probably continue to have value. Some that are real, art that people, I can have the NFT to represent the art. Maybe I can actually get it printed and put on my wall or something. Those are probably going to have value. But I think what's going to happen, Mehdi, is NFTs, or the technology behind NFTs is going to go more towards other things we've talked about in the past, like airplane tickets and automobiles and Ticketmaster and those kinds of things. That's where we're going to see the NFT technology move, the art, the PFP, NFTs, all that has probably, lost a lot of value. I don't know that it will ever recover it unless, people find those ways to earn income from it and they become valuable more because of cash flows than because of the actual art.
Well, someone who is jumping on this whole bandwagon is a guy in Guatemala. I don't know if you've seen this, but this guy's mining Bitcoin with used cooking oil as his energy source. And I don't know if you can see this video; it should be going now. But this is. I just thought this was a great way to wrap. It's awesome. He's got a nice little rig set up, and it just shows that people are getting creative in what they're doing. But you know what? Good for him.
Yeah.
He's using a used product, he's recycling it, creating energy out of it, and he's powering his rig, and he's making money on the back of it. So good for him. Crack.
Yeah, good for that guy. And that's, next to, not too far from El Salvador, where they're
The volcano.
I think they're mining Bitcoin with a volcano. It's like, let's see, as the price goes up, people are going to find new ways to, get some sort of energy or electricity and mine Bitcoin. And it's a little funny. I'm sure he's not making a whole lot from it, but whatever. I mean, what else are you can do with your used cooking oil? You power up a generator and you connect it to a Bitcoin miner and see what happens. And every so often, maybe he'll earn a little bit of Bitcoin from it. And, once the price goes up, maybe it could be significant. I'll tell you what, no one is cheering for a Bitcoin spot ETF application as much as that guy.
That guy is
the biggest
BlackRock
fan in the world. Yeah.
Good for him. Adam, mate, as always, thank you so much for your time today and sharing your thoughts on the crypto revolution.
Thank you for having me, Matty.
And to our viewers, obviously, don't forget to check out Adam's course on digital assets and crypto education. You can see it up there, Interaxis. The website is down there. And of course, don't forget to subscribe to Your Finance TV. Get it done. We'll be back next week with more about the crypto revolution. Until next time, good luck investing.